Hello traders, you're welcome to this video. In this video, we are going to be looking at the best EMA settings. The best EMA settings for day trading, okay? The best EMA settings for day trading. All right, now we're just going to be looking at a step-by-step guide, to make it more effective, right? So first of all, we're going to be looking at how to use the 9, 20, and 50 EMAs. So we're going to be adding them to our chart one after the other. We'll start with the 9 EMA. Okay. This is the 9 EMA. It's a fast moving average reacting quickly to price changes. So this one is perfect for short-term trends and finding quick entries. This 9 EMA. Then next is the 20 EMA. Next is the 20 EMA. The 20 EMA serves as a balance between short and longer term trades, okay? Between short and longer term trends, and it helps confirm the general direction of the market. Then finally, we are going to be adding the 50 EMA, to our chart. So the 50 EMA is the slower moving average, and it shows the overall trend over a longer period. It helps you avoid going against the market's direction. Okay. Now we are using the MT4 charting platform. So after adding these indicators to the chart, it's good if you use different colors so that you can be able to identify them. Now, secondly, we are going to be looking at how to use these indicators now. So for the entry points, we are going to be using the 9 and 20 EMAs, right? Remember the 9 EMA is this yellow color, then this one is the 20, then this is the 50. So when the 9 EMA crosses above the 20, as we can see here, when the 9 crosses above the 20, it's a typical signal that the market is gaining upward momentum. Okay, it indicates a potential buy opportunity. Conversely, when the 9 EMA crosses below the 20, as it happened here, signals a possible selling opportunity. Okay, then now we are going to use the 50 EMA for the trend confirmation. So before entering a trade, check the position of the price in relation to the 50 EMA. If the price is above the 50 EMA, like in this case, it confirms a bullish trend. So we can then enter our buy trade. That was after the bullish crossover happened between the 9 and the 20, and the price is now trading above the 50 EMA, then it confirms our bullish trend. Okay, avoid trades that go against the 50 EMA unless you are targeting very short-term moves. Okay, now on the other hand, when price is trading below the 50 EMA after this crossover had happened, then you can now enter your sell. Okay, now when it comes to breakout trades, watch how price interacts with the EMAs. Now we're talking about combining EMAs with price action. Okay, when it comes to breakout trades, try to watch how price interacts with the EMAs. When the price consolidates near the EMAs, for example, let us see around here. Now you can see that there was a consolidation happening around the EMAs. Okay, and then maybe finally you have a breakout in one direction. You have a breakout in one direction, like somewhere around here. This was a false breakout, but eventually we had a breakout here, although it did not last for long. Anyways, so when you have a breakout in one direction, it often leads to stronger moves. But in this case, though it broke out, there was even a retest. As you can see, there was actually a retest, but then the move was not too long. Yeah, but it was actually a valid move anyways. So you look for candlestick patterns, and you can see that we had a candlestick pattern form here. We can see this gravestone doji from here. So this was a valid sell. It was actually a valid sell. So you can use that as additional confirmation. Okay. Now you're supposed to also adjust to market conditions. For example, in fast-moving markets, the 9 EMA will hug the price closely. Now let us look for a fast-moving market. You can see that this was a trending market. The trend was quite strong. And you can see how the 9 EMA was hugging the price. Like, it was really moving closely with the price because the trend was quite strong, okay, giving quicker signals. But in slower markets, the 20 EMA and 50 EMA become more reliable, okay. When the market is slower, you can see, like in this situation, you can see that the 9 EMA is not even reliable at all. It's just moving randomly, if I'm to say that. But in that situation now, you have to rely more on the 20 and 50, okay. So this shows that the price is still above the 50 EMA and is still somehow bouncing above the 20. So it shows that it's still a buy trade that you should be looking out for, okay. So in a slower market, it's the 20 and 50 EMAs that you want to rely on, okay. Once the price bounces off these EMAs with a bullish candlestick pattern, it's a potential buy signal. So in that situation, you might want to set your stop loss below the recent swing low, for example, around here, and you can target the next resistance, perhaps around here, okay. Target the next resistance for your take profit. And I've exited somewhere around here for take profit, okay. Now in a downtrend, if the price is below the 50 EMA, if the price is below the 50 EMA, you wait for the 9 EMA to cross below the 20. You can see the crossover happened here, but we have to wait for price to trade below the 50, okay. Then around here, we could have considered entering a sell, yeah, and then take profit can be at the nearest support zone. Yeah, stop loss can be right above the swing high, okay. That would have been good spots for stop loss and take profit. Okay, so basically by combining the 9, 20, and 50 EMAs with price action, you'll be able to catch key trend reversals and continuation setups, improving your day trading performance. So I hope you found this video insightful. Kindly like, subscribe, and share also. And don't forget to hit the notification bell so that you don't miss out on more updates on trading insights, okay. So thank you so much. Cheers and happy trading.